So, Joe, after weeks of delay, OPEC has finally confirmed its dates for July 1st and July 2nd. You've covered OPEC for Hedgeye for years. Give us a review on what's going on and what the outlook is.
Yeah, so they finally agreed on dates, which is the most important thing, especially for those of us making travel arrangements and not wanting to have high, airfares and hotel bills.
You're going to Vienna?
I'm going to Vienna, yeah. So the dates are now July 1st and 2nd, and the original dates were June 26th and 27th. And essentially what happened, Iran is getting a lot of the blame for the delay, but really Russia was the one that requested the delay. They wanted to move the dates to July 3rd and 4th. The Saudis quickly agreed to that because really Saudi Arabia views Russia's participation in the OPEC Plus group as one of the world's top 2 or 3 producers as critical for market sentiment for the production cuts. But the problem was other countries didn't agree, and most notably Iran. And the Iranians were getting most of the blame towards the end. A lot of the other countries that opposed it, just really for scheduling reasons, in my view, just because ministers have busy schedules, and they had been planning to do it one date, and the Russians threw them this curveball. The other countries sort of acquiesced to changing the dates, and really Iran was standing alone. They suggested the second week in July, but yesterday I guess they came to an agreement on these early July dates, which really they needed to do because the current agreement ends on June 30th. So technically, there is no agreement after that point. Now the dates are so close now, I think they've avoided that problem. But I don't really view it as a lack of unity in OPEC. A lot of people sort of view this whole dates drama as a chink in the armor of OPEC unity. I don't really see that. I see it more as just sort of a scheduling thing. In terms of the policy, which is really the main show, this other stuff is sort of the sideshow. I think not only is there a rollover of the meeting, there's going to be a rollover of the production cut. I think that's quite likely. The Saudi ambassador, when he was in Russia 2 weeks ago, said it's in the bag, at least from OPEC's standpoint, leaving a big question mark about Russia. So I think the only 2 questions are, 1, how long is the cut extension for? And 2, what's Russia's compliance going to be like? And both questions are interrelated. First, the Russians are really not keen on renewing the extension and extending the agreement, mainly because their energy companies want to start producing. They've been sort of delaying new development projects, and they would just like to be producing more. But that's starting to bleed over now into Russian government officials who are now increasingly concerned about surging U.S. production, now surpassing Russia as the world's biggest producer, mainly from taking market share. And there's a whole side argument that we could get into a later time about crude quality, whether it's really threatening their market share. But anyway, that's the view, I think, from the Russian standpoint. And also, they believe it has impacts to the Russian economy. Putin is really the big wild card here. He likes the idea of being a major player in the world stage with the Saudis on such a big deal as oil policy. But he too now is increasingly starting to see rising U.S. production as a threat to market share and also sort of global world dominance in energy, which is something to keep an eye on. But I do think Minister Al-Fallah sort of solidified Russia's participation when he was in Russia 2 weeks ago. I think that one of the big announcements out of that meeting was that Putin would be going to Saudi Arabia in October. And in my view, that announcement never would have been made if he didn't already have an agreement from them to participate in the rollover. So my only question is, what does Russia do in compliance? Yeah. And I think there's kind of probably a tacit agreement between the Saudis and the Russians that they get a pass on compliance. And that really won't be talked about in Vienna, but I think we'll see a sort of a phase in, a longer phase in maybe, at least that's how it will be explained by the Russians, in terms of their compliance. So I really see Russian production rising despite this agreement in June, or in July 1st and 2nd in Vienna. And then the other question is, how long is the extension? I think it's very likely it's only a 6-month extension. I think it's really hard to do more than that, recognizing Russia's concerns about even extending in the first place. I do think, however, that if they would extend for longer than 6 months, it would be bullish for prices. And I think there are people in OPEC looking to send those signals. There was also a trial balloon by the Algerian minister. Maybe the cut should be deeper. I don't see that happening either. But you'll start to see, I think, next week, a lot of these themes to start being interjected to sort of talk up the market and the expectation regarding the OPEC meeting.
Is there any pattern to these extensions? Have you seen that over the past couple of years? Or?
Yeah, the pattern is it's 6 months, essentially. And that coincides nicely with OPEC meetings, because the next OPEC meeting is in the winter in December. So the next one would be up at the end of the year.
Yeah.
So they have a chance to review where the market stands. And OPEC doesn't like to get in front of the market. It likes to really just see where the market goes and sort of responds to it. So it would be unusual, I think, for them to announce something larger than 6 months.
So you briefly mentioned Iran at the beginning of your comments, and let's just talk a little bit about geopolitics right now. We have 2 tanker attacks in less than a month, and it seems as if oil markets haven't been rattled.
Right.
Why, and what's your outlook here?
Yeah, I have to say it's really surprising to me that that some people question whether Iran's even behind these attacks. I mean, I take the point that it's really not in Iran's interest to do these or be behind them in whatever way they are. But that doesn't mean they're not behind them, or elements in Iran or some of their acolytes are behind this at their direction. And I think, setting aside the price argument for a minute, I think Iran, I think, is decided it wants to sort of spread the herd around. I mean, U.S. sanctions are really starting to bite now. Iran is starting to see their customers drop off one by one, and it's becoming more real to them now that the U.S. isn't providing waivers. Still a big question mark about what China does, and to some extent India. And then you have some illegal exports that may be taking place to Syria and other places. But for the most part, Iran exports are down dramatically. I mean, we said several months ago we saw it around 300 to 400,000 barrels a day. That was sort of viewed as being a wild, outlandish prediction, but we're probably going to even be lower than that, I think. So that's starting to really hurt them. And I think, so in my view, if the U.S. has this maximum pressure campaign against Iran, Iran is starting to develop a maximum geopolitical chaos plan. And their, I think, goal and objective behind this is to really get the U.S. to rethink the policy. Get Trump to think, oh, higher prices, oh no, I don't want to commit to another war. Raising the temperature level generally in the region. I think they think maybe the U.S. rethinks waivers, maybe Trump ratchets down the military, but somehow it gets the U.S. to rethink its posture if there's all chaos being created. And so I think that's their goal. I also think they like to see prices go up for 2 reasons. Number one, and I think the main reason, is they think higher prices hurt Trump politically, and also it affects his thinking. And so I think that's what the main goal is there. The secondary goal is higher prices maybe allow them to get a higher price for whatever kind of exports they can manage. But when you're under U.S. sanctions, regardless of this type of situation, your oil sales are going at a fire sales.
Are the U.S. allies in Europe and other countries following suit with the sanctions?
They're not, and this is obviously a point of contention. U.S. sanctions are really, in effect, global sanctions, and this is something we talked about early on, about 2 years ago, predicting that would be the case, because all of these European oil companies and really global oil companies, even in China, are now intertwined with the U.S. economy. And so U.S. sanctions have really had a big impact. So the Europeans haven't gone along, but as Iran has now announced that they're going to start enriching uranium and start piercing different parts of their side of the JCPOA agreement, the Europeans are going to have to think sort of twice about what they want to do. In terms of your question about prices, I mean, really, the market is now sort of weighing two things. One, concerns about the global economy and trade is a heavy component of that. And two, geopolitical events. I mean, these tanker attacks, in normal times, you would have seen a big spike in oil prices. And you saw like a little bump and then they retreated a little bit. But I think that's just, it's really the global economic picture and to a large extent the trade, the U.S.-China trade issue really overshadowing that. But I think the market has to be careful here because I see, as I said, this Iran plan to create more chaos geopolitically. I think there are geopolitical risks in Venezuela, in Libya, and in other places. And so I think we're going to start seeing geopolitical risk like a whack-a-mole thing. And so I think it's only going to rise. And so I think at some point it's going to be with us and the market's going to have to start paying attention to geopolitical risk.
Yeah, this week the EIA reported its first draw in weeks in crude inventories, and they've given prices a bump, but we've seen a steady decline over the last 2 months. What's your read here and your outlook?
Yeah, I mean, the last 2 weeks we had inventory builds, very unseasonable for this time of year. So yeah, it was good news that we got this week that the builds were starting, or the draws were starting to happen. And I think what you're going to see, I mean, look, as we just talked about, I think the concern about the global economy and to a large extent trade is really sort of dictating, oil prices right now. I mean, OPEC can do a lot in terms of production cuts. They can't control demand and demand forecasts and the global economy. So that's sort of out of their hands. On the other hand, there have been a gloomy demand forecast from EIA, OPEC, and also the IEA. But today, also in the EIA data, we saw the strongest gasoline demand in over a year. So gasoline demand is not really, and these are actual numbers. These are not forecasts. So I think the demand is still there, and these forecasts are based on really the global economic factors and forecasts. But I think consider this: the Saudi production is down by more than 1 million barrels a day from the fourth quarter of last year. It's a huge amount of barrels that they're not producing, that they were producing last fall when prices crashed, but yet prices haven't retreated. A reason I think for the inventory builds is the refiners in the U.S., and I think other parts of the world as well, are down for maintenance now. Now, normally they'd be down for maintenance, but they're down for an extra longer time because they don't want to go down for maintenance in the fall as they ramp up to build, to produce a lot of the low sulfur fuel for the shipping industry to meet the IMO guidelines that go into effect in 2020. So they're going to be full tilt in the fall. So I've talked to refiners, and refiners will tell you, like, get ready, the market tightness is going to start happening from a physical standpoint. But certainly, the market views, is shorting oil right now, mainly because of these economic concerns. And that's really, I think, overshadowing the fundamentals, which I think are quite tight. So I think you're going to see inventory draws continue. The Saudis are reducing their exports to the U.S. to intentionally create those draws. And it takes a couple months for those tankers to get here or not get here. And so it hasn't really started showing up yet in the data, but it will. And the production cut rollover will just ensure that that's going to happen. And a rollover of the production cuts, I think, is going to ensure that that happens as well. So I think we're going into a much tighter market, and it's just a matter of whether these macro economic concerns can be resolved, or just the narrative about, and the market sentiment about the really tight physical markets can overcome or overshadow even the macroeconomic concerns.
Yep. That's great, Joe. Thank you very much again. Look forward to hearing from you in Vienna.
That's
live
right.
on
2
July
weeks.
2nd, July
Tune
1st,
in.
July 2nd. So thanks again, and we'll be back soon.